Hello, just giving it time for people to jump in, to, as I say, come in the dance. So let's get that going. Welcome everyone. 2 days before 2022 is with us. 2 days before 2022 is with us. Are you guys feeling excited about 2022? Are we ready to make 2022 a better year for us and our money, and to start doing good things with our money, to come on the money side? Is that what we're looking to do in 2022? Drop it in the chat so I know. Hi, Coach Keisha. Give me money here. Give me a money here so I know you guys are serious and you're saying, yes, I am ready. 2022 is going to be my money year. Drop our money in the chat so I know. Nice. Nice. All right, so day one was great. We had a good time on Tuesday. Money coming in, yes. We had a good time on Tuesday talking about things that we wanted to leave behind in 2021 and things that we're going to be picking up in 2022. For persons who weren't here, let me just do a quick recap. What we want to do, one of the main things we are doing first is our mindset. We're focusing on a mindset of abundance. We're also staying in our lane when it comes to our money and not living for the gram, living a fake life, living that YOLO mentality, but at the end of the day, we're broke. Not doing that. And we're also going to be serious about investing in ourselves and investing in our portfolio. So those three things we're picking up into 2022. We want to make sure investing is a tried, tested, and proven way to create wealth. There's no way to create wealth without it. It has to be one of the strategies. Even if you have a business or you're employed at a very senior level and you're raking in the money, you still need to be investing that money once it comes in. The key to wealth, the key to lots of money is to earn a good income. And then once that income comes in, don't spend it, but invest it. Put that money now to start working and growing. That's how it goes. So you earn money, and you should always be pushing yourself to earn as high an income as you can, whether in your business or in your place of employment. You need to be pushing to earn as much money as you can. Once you earn that money, we need to put that money to start growing now. So you earn the money and then you grow it. You grow it. And how you grow it, one of the best ways is through investing in the stock market. So today what we want to talk about is how exactly do you start investing in the stock market? What exactly do you need to do? And then how much money do you need to put into the stocks? What stocks you need to buy such that you grow the money? And I'm going to give some examples. You guys can drop in the chat if you want me to give any particular examples as I share them. But there is a formula to wealth, and I'm going to share that formula with you guys today. If you follow it, you will be wealthy. It's not rocket science. It's not something only exclusive for a certain set of people who are already born wealthy. This is something that anybody can do. Anybody can be wealthy. I truly believe that. I have seen it. I have invested money over the years for myself and for people and made a lot of people wealthy, including myself. I want to show you guys how to do that today. And so I told you, bring your notebook, bring your pen, bring a little glass of bubbly or a little rum. Let's sit back now and we're going to really get into the details of how exactly do you create wealth, because I want you to be on that wealth creation journey for 2022 and beyond. So one of the first things you need to do is open your investment account. What I mean by that is that you need to open an account that has the word equity or a trading account or a brokerage account attached to the name. That means going to your bank. The bank normally gives you first a savings account or a checking account. That same bank, all of them have an investment division. All of them have an investment department, an investment company. So you're going to go to that investment area of the bank and ask them to open an investment account. You tell them, I want to be able to buy stocks, and they will help you to open that account. There's usually a very small minimum amount of money, probably in Jamaica 5 or 10,000. In the US, it's $100. You're going to then put that money in the account. So whatever the minimum amount to start is, just to open the account, you're going to do that. For those who are on the call or on IG and you're saying, I want to invest in the US stock market or in the international stock markets or the global stock market, you need to open an account with an international broker. No matter where you are in the world, you can open that account. One of the easiest ways to open it is with Interactive Brokers. The website is interactivebrokers.com. You can go there and open the account, regardless of where you are in the world. Jamaica, USA, Canada, Sweden, Australia, you can open your account there. You go to www.interactivebrokers.com. Or you can go to TD Ameritrade. They're also another online brokerage platform. You also can go on Questrade if you're from Canada, or Wealthsimple if you're from Canada. In the US, you can go to Morgan Stanley. You can do Robinhood, which is one of the very popular ones. Robinhood is there. You can open the account. And you're going to open the account and put the minimum amount that is required in there. That's the first thing we will do. Open the account. The account has to have the word equity or trading or brokerage account in there. And then the next thing is to put some money in that account. We can do this. We can get it done in the next couple of days. Not very hard to do. So we're going to get that done. When we open the account, we're putting the minimum amount in there. And then the next thing we need to do, this is the secret that not a lot of people know. The secret, which I'm telling you all today, is that you have to put consistent monthly contributions to the portfolio. You have to put money every month. So it's not a set it and forget it when it comes to investing. A lot of people will think, oh, you know, I need a whole heap of money and I'm just going to put that whole heap of money into one stock and I just leave it. They say buy and hold, so I'm just buying and holding until I die. That's not how it works. How it works is that you have to be putting in consistent monthly contributions into the portfolio. You have to put money every month. Every month you have to put money. And then you guys will say, all right, what exactly is the amount of money I need to put? What's a good amount of money, right? That's what you want to know, because we're going to take that money and buy stocks. So I did some calculations for you all. Let me share the numbers. Average returns that you get from stocks over the long term, this is known, over the entire history of the stock market, on average, meaning good year, bad year, and we average them out. On average, you make 10% a year or more on your money. So I was very conservative and I used 10% to say, all right, given that you're going to make 10% every year, how much should you be putting in every month? And so if you put in $15,000, regardless of the currency, if you put $15,000 in your investment account every month for 5 years, that $15,000 every month is going to grow to $1 million. This is how you become a millionaire. Where people say, you hear people saying, well, you know, want to be a millionaire, I want $1 million portfolio. How you do that, you need to be putting $15,000 per month in your account. If you want to be a millionaire in Jamaican dollars, that is 15,000 Jamaican dollars. If you want to be a millionaire in US terms, that's 15,000 US per month. If you want to be a millionaire in Canadian terms, that's 15,000 Canadian dollars per month. No, that may sound a lot in the different currencies, right? So we're going to break it down other ways. So that's if you want to get to $1 million really, really fast, that is what you would need to do. If you have a longer time frame, which a lot of us do, we don't need the money in 5 years or less. We have the time to grow the money. And we have the patience and we have the consistency to keep putting money in our portfolio. Then you could put $1,000 every month for 10 years. That's going to go to 200,000 if you do that. $1,000 regardless of the currency. So I'm starting very small, Moby. Very small. $1,000, whether 1,000 US or 1,000 Canadian or 1,000 Jamaican. If you put $1,000 every month into your account, your investment account, and we use it to buy stocks, you're going to have $200,000 in 10 years. That's how much the money will grow to. $1,000 is not a lot of money for you to kind of scrape aside in Jamaican dollars. In US, 1,000 US per month may be a stretch for some people, but some people on this call probably can do it. So I'm giving you the numbers. $1,000 a month over 10 years, you're gonna have 200,000. If you do $10,000 a month over the same 10 years, that money will grow to $2 million. And if you put 50,000 a month, that's gonna grow to 10 million. Now, 10 million in US terms is a whole lot of money. But 10 million in Jamaica is a nice little change to have. So let me go over it again, right? $15,000 a month for 5 years, earning 10% a year, will grow to $1 million. $1,000 a month for 10 years will grow to $200,000. $10,000 a month for 10 years will go to 2 million. And 50,000 a month for 10 years is gonna grow to 10 million. So it's your choice what you feel like you can comfortably put each month. Remember, we talk about living in abundance. So I don't want you to sacrifice to the extent where you can't meet your basic living needs. That's not the aim of this. The aim of this is to live a nice, full life. But I want you to put aside your investment money first. Put aside that money and then follow these rules, because what we're using to our benefit is compound interest. That's money growing on top of money. We want to use that to our benefit because compound interest is our friend when we are investing. Compound interest can kill you on the credit card and the debt side. That's where it's very bad because the interest is adding on top of interest and you need to pay that. But when you use compound interest on the investing side, it is a beautiful thing because you put on your money, you be consistent with putting your money into your portfolio and buying stocks, and that money will grow without you doing nothing. Anything that you just sit back, you relax, the money is gonna grow because of compound interest, and we love compound interest for that. So yes, Omari, you're talking the things now. Put that money in what portfolio? Which is a natural question that's gonna come because I've told you, all right, you're putting this money every month, but what are you buying with the money? That's what people want to know. What are you buying? Because the money has to be put to use. So you're not going to put the money in the account and leave it because it's not going to grow if you do that. The money inside the investment account has to be used to buy stocks. That's how it works. And then what you need to look for, because Keisha told you, you need stocks that are giving you at least 10% returns. So you can look on the past performance to get an idea. It may not be what happened in the future, but you can look on the past performance of stocks of different companies listed on stock exchanges, see what the past performance looks like, and then say, maybe if nothing bad happens to these companies, maybe they could more or less continue along that same path. Maybe not. That's where I come in because I teach you how to do the research, and we do that in the Money Squad. We're doing that in the Money Challenge as well. How do you find good companies? That's what we're covering in there, because good companies mean that your money grows nice, means that you can sleep at night over the long term. Yes, there are going to be some hits, there are going to be some losses. There is, because we're talking investing, you will have the potential for losses, but what we try and do is to minimize that, right? And there's a process, there's a method that you follow to minimize your losses. But what you want to start off doing is buying stocks, investing in companies, buying equities, as they call it, in companies that are great companies, as I call it. The framework I teach is called the Great Investing Blueprint. How that works, we're basically looking for companies that have growing revenue and net profit. So when we look at the company, the sales must be going up every year, and the profit that the company making must also be going up every year. That's one of the first things we look for. Ours is the sales growing, is the profit growing. If that's a tick, we say, all right, let's move down the line to the R. The next thing is that the company needs to have a renowned business model, meaning the business model have to be very strong. It have to be something that sets the company apart. When you think of a company like Apple, my favorite company, which everybody knows, Apple has a renowned business model. Their MacBook, iPhone, people always buying these products. And every year as a company comes up with new products, they're going now into the metaverse as well. Everybody's interested. This is a company that has a renowned business model. For example, the next thing, the E in great, is expert leadership. The leaders of the company need to know what they're doing. NCB in Jamaica has expert leadership. The leadership team is strong. They have a track record. They know what they're doing. The A is the asset base of the company. That needs to be strong, meaning we need to see physical assets. We need to see intangible assets like patents and trademarks, and these need to be also a very large amount, and they need to be growing over time as well. We don't want any company that just started, a company that have no track record, no assets, no buildings, no equipment, and we say, you know what, I'm going to put my money as an investment here. That won't work. For sure, you're increasing the chances of losing all your money doing that, because we need to see assets. Companies with a strong asset base grow over time. And the T is that the company needs to be at the top of their sector. We only buy the creme de la creme. We buy the top of the top of the top in terms of companies. We want companies that they are the number one or the number two in their category. All right, I mean, somebody's asking, I mentioned profit, but what about cash flow? Cash flow is important. It is, but cash flow is nothing if the company is not making a profit. The company has to be making a profit, because profits are what moves share prices. If there's no profit, the share price won't go up, and you need the share price to go up so that you make money. Profits have to be there. Yes, profits can be easily manipulated. They can, but there's no company that's going to manipulate profits over a long period of time. And that's why I look for a track record. I don't look on just 1 year. I look on track record. You have to have a nice 5 to 10 year history of growing profits. No company is going to manipulate 10 years of profits. That's not going to happen. We need to see the track record. And the great companies have that track record. So you're not going to find me with my money taking it and putting it into something that is very speculative. A new company with no track record. Not going to do that. Definitely not going to do that. IPOs, I will invest in IPOs for companies that have a track record, because my philosophy, my investment philosophy, my way of investing and the way that I teach is that the company needs a track record in these things. Companies that have a great potential for growth. And I'm just answering questions from IG. Women Invest JA is giving me some good questions. So she's asking, or he's asking, I guess it's probably a she, what about companies that aren't at the top, but great potential for growth? Now, yes, there's opportunity there. It comes back to, do I see the track record, right? Top 1, 2, that's my philosophy of doing it. You may do it another way and say, you know what, I like the underdogs. That's not my way of doing it, because the underdogs, the companies that, you know, the up and coming, the great potential, they sometimes have a lot of volatility in the stock price, meaning that the price going up and down. Not everybody can stomach that. I like sleeping at night knowing, all right, the amount of loss I may get from a company is not that much, because I also diversify what I buy. I'm not going to buy just one stock. I have a nice diversified portfolio, a nice group of stocks, and I look at that. Yes, women, so you go for the underdogs. That's your philosophy. My philosophy is I like the top of the top. Both strategies can work, but the way I teach is to go for the top of the sectors, because the underdogs have a lot of volatility. And unless you're comfortable with those swings, not a lot of people can manage it. Not a lot of people. A lot of people say, oh, you know, I lose 5%, I lose 10%, I lose 20%. I can't manage, I can't manage. That's a lot for people. So when you buy the underdogs, you get a lot of that. Bitcoin, for example, that's up and coming in terms of cryptocurrency, very, very volatile. People can't stomach it because it's up today, your money triple, it quadruple, tomorrow you lose 50% of your money. Not a lot of people can take that and see the money swinging up and down. The top of the tops are more stable. The price steadily moves higher. And I like that. I like the stability. I like just knowing that this company not going anywhere. Some of the underdogs you can lose with. I don't like playing that probability of a higher chance of losses with the underdog. So I tend not to go there. So what we want to do then, recapping, we're investing in great companies, growing revenue and net profit, expert leadership, renowned business model, expert leadership, asset base must be strong, and they must be at the top of their sector. Now, questions coming in, let me take some of them. Darren Marshall says, you're talking about crypto or stocks? Talking about both. When I mentioned the volatility, I was talking about both. Because the cryptocurrencies, I just use that as an example of volatile investments because the price swing is very aggressive. And then Michelle on Zoom is saying, so it depends on your risk tolerance. Yes, the form, your style of investing depends on your risk tolerance. If you're someone who is, yeah, you know, guns blazing, I can do this. I love taking a lot of risk. Sure, you can go into the underdogs, you can go into the more speculative type of investment, you can go into the new. For someone saying, well, you know, I'm more conservative, I can't stomach all of this volatility, it's too much for me. You go with my strategy, the Great Investing Blueprint, where you stick to the top of the top, the creme de la cremes. What do you think of the new IPO Spurtree? What do you mean? Spurtree has the track record, right? They do have the track record and they're coming to market. Any other questions? Unit trust, let's talk about those. So unit trust and mutual funds, same name. These products are a group of investments inside of it. So if you think of stocks as flowers, the unit trust brings them all together in a nice little bouquet. So you have some little stocks, you have some bonds, you have some money market securities, and unit trusts are managed by a professional investment manager. I used to manage them, right? And what we would do is that we do the allocation, we do the diversification, we do the research for you, and you get the exposure. So unit trusts are good for persons who say, you know what, I don't have the time to do the research myself. I prefer to have a professional do it on my behalf. Now, there's a new, and it's very similar to a unit trust. It's called an exchange traded fund, an ETF. I like those because they're more passive. The unit trusts are actively managed. So you have an investment manager moving around the allocations for you. The ETFs, some of them are passive, meaning they replicate, they follow the movement of an index. And so it's a nice passive way of getting gains for your portfolio. So like SPY in the US, SPY, is an ETF that has the top 500 companies in the US stock market. That's a nice way, if you invest in that, of getting just broad exposure to the stock market without picking stocks yourself. You could just buy SPY and just hold on to that. So Don, is it a good time to buy Apple stocks? I'm not going to give any specific investment recommendations on this call, right? I'm teaching you the framework. When we're pulling the trigger now and saying, all right, I am buying 1, 2, 3, 4, 5, that is your personal decision. Is it a good time to buy Apple for you? That is your personal decision, right? I'm giving you the information, the knowledge. I'm telling you exactly how to do the research, and then you can come up with that decision on your own. So I've given you what to look for in Apple. When you look at Apple, you can say, well, you know, based on what Keisha's saying, it does meet the criteria, it doesn't meet the criteria. Then the next question you need to ask is it right for me? Should I have it in my portfolio based on what I want to achieve? And then if it's yes, you go ahead and you buy. SPY and the S&P 500 it's the same return. The SPY is just the ETF, DRN. Are there any ETF in Jamaica? There are products that are very close. They're not in the truest sense of an exchange traded fund, but there are products that are very close. Could you explain what's meant by compounding? All right, so compounding means returns on top of returns, money on top of money. Your money growing on top of itself. So you earn 10% this year, then on top of that 10%, you earn a next 20%, and on top of that, you earn a next 15, the money keeps growing. And then we have another question, should we earmark a specific sum each month for unit trust? So these are personal decisions, Michelle. Depending on what you want, if you can't do the research yourself, it is absolutely better to go in with a unit trust, if you can't do the research yourself. If you can, and you say, well, you know, Keisha, teach me how to do the research, I can absolutely do that. And then you know would be able to go and buy the stocks for yourself. But if you're saying, well, I can't do it, I don't want to do it, having a unit trust is better than nothing. There's no money made on the sidelines. We don't make money there. We have to invest. We have to put the money to work for us. And that's what I want you to do at the end of the day. Regardless of what your personal decision leads you to buying, I want you to make sure you're investing. You absolutely, absolutely have to be investing. So the last M, for example, in Jamaica, is very similar to an ETF. All right. I love the questions. You guys engage. It seems like you're ready for the new year with your money. I love it. So recapping for persons who are just coming on. What we want to do is to make sure that we are investing. When we're investing, we have to put money in our portfolio every month, and that money has to be used to buy great companies based on how I teach it. Other persons have different philosophies there. You can follow those, right? It's your personal decision ultimately. You want to buy great companies. So that means you're looking for companies with growing revenue and net profit, a renowned business model, expert leadership, asset base must be strong, and they're at the top of their sector. Once you find those companies, consistently buy them every month. Consistently buy them, because over time, as you keep buying, you're going to find compound interest works in your favor, the money growing on top of the growing, the money growing, growing. And this is how you reach those $1 million targets. This is how you achieve that millionaire status in life. You keep investing. Where a lot of people lose off is that they're not consistent. They put in money and they stop. They put money this month, don't put money next month. Put money 3 months later and they stop. The inconsistency will hurt you. It's gonna hurt you because you're not giving your money the opportunity to work for you. So what you're saying is, you know what? I won't put any money this month. What I'm gonna do is I will just work harder myself. I'm gonna do some overtime. I'm gonna do a side hustle. But more simply, you can just put the money to work for you. Put the money in your portfolio, right? Investing in the top companies in a sector, wouldn't that be more expensive to invest per share? So love this question, Waltkin. Now, a lot of people think a stock that is $500 a share versus a stock that is $2 a share, the $500 company is more expensive. That is not necessarily true. What we need to look at is the future value of the company, the future prospects, the future profitability. The $2 company may have less profit in the future than the $500 company. Or the $500 company may have less profit in the future than the $2. The key is to focus on the future growth potential, the profits. Net profit is what moves the stock price. That is what you focus on, not the dollar amount per share that you're paying today. A lot of people have the misconception that, you know, a stock for 10 cents is very cheap, I need to buy it. No, not necessarily true. We need to look at what is the future profitability. That's what we need to look at. What is the future profitability? All right, I love these questions. I love these questions. What I want to know from everyone here, can I get a yes that you're going to be starting your investing portfolio in 2022? That is the purpose of me coming today. I want to make sure everybody here knows exactly what they need to do. Nobody should leave this call saying, I wasn't too sure, you know, I'm not really sure. At the very minimum, you know how to open the portfolio, you know how much money you need to be putting in there monthly, and you have a very good idea of the types of companies you need to be buying. I want everybody here. Yes, 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 yes. The consistency matters. It absolutely matters. You have to put the money in monthly. That's what a lot of people don't know. They think it's a set it and forget it. They think I just put it this month and I leave it alone forever. That's not how it works. You have to be consistent. Same like when you water plants, if you stop watering it, the plant just die. You have to pour money in the portfolio. Keep watering it and you're just gonna see it grow and grow and grow. That's how it works. The 5-day money boot camp that is coming up, I'm going to teach you now the specifics. A lot of people asking me, how I know exactly what to buy, what price I need to buy. That's what we're doing in the 5-day money boot camp. If you're interested in doing that, it's still open, 5daymoneybootcamp.com. Sign up, 5-day, number 5, moneybootcamp.com. The registration is still open. I want you guys to be there with me on the money side. That's where we're going to be going into even more details. And then Nivek says, not putting money in monthly is not like opening your business some months. Exactly. It's like you have a business and you say, no, I want to shut it down for this month. Nothing will happen. No revenue. You're going to struggle. We have to put money in our portfolio every month and be consistent. People here who are my clients in the money squad, you know, I'm on you. Money every month in the portfolio. Money every month, because this is the key. This is the key, the consistency. And a lot of people don't get it. The consistency is what matters. Right? Omar, what will the class be about? 5-day money boot camp. We're talking about day 1, abundance, mindset. Day 2, we're talking about budgeting with abundance, because we don't believe in that scarce life. We don't believe in the scrimping. Day 3, we're talking about debt, how to get rid of it while you're investing. You can and you will be able to do both. How do we get rid of debt at the same time we're investing? Day 4, how do we create that emergency stash of money, because we need it. Nothing is certain in life. We need to have that emergency stash. Day 5, we talk about investing. That's where we're going to a lot of what we're talking here. I go even more in detail. We talk about how to open the portfolio, where you go, what you need to ask to do, how much money you need to put in there to start. I give you the different calculation, because it's all a numbers game. It's all a numbers game. Then we also talk about how much money you need to put every month. This is where you have me one-on-one. You ask your questions. You're saying, all right, if I put 2,000, how much will that be? I'll show you how to do the calculations for yourself so you know. And then we also talk about what companies you need to buy. I told you need to buy great companies, but give me some example of great companies, Keisha. That's what we'll be doing on day 5. Chanel is saying, which bank or brokerage is the best? The best is a personal decision, because it depends on how much fees are you willing to pay. Each brokerage has different amount of fees. They have different services. They have different access points. You choose what resonates best with you, right? That's what it comes down to at the end of the day. I don't care which one you choose. What matters, what is more important, is that you have a brokerage account. So I don't want you to delay and say, well, you know, I need the best, and until I have the best, I'm not going to open one. Open the account, start investing. That is what matters most. If at some point you decide to move accounts, you can always do that at a later date. But what is more important is starting. So easiest thing to do, if you have existing checking accounts or savings account, you can go and open your investing account with that bank. It's the easiest thing to do, because you already have a relationship there. You're already used to going there. You're already used to their online platforms. So just open the investing account, the brokerage account with them. Nice and simple, quick move, because it gets you quicker to investing. It gets you quicker into the market. And that's where I want you to be, because that's where the money is, in the market. It's not over there on the sidelines, over analyzing and thinking. The money is when you're investing, and when you are investing consistently. Yes, outside of the bootcamp, I do one-on-one coaching. Michelle, you can reach out to me. Just send me an email at profitjumpstart@gmail.com, or reply to one of the newsletters. You guys get a lot of newsletters from me. Reply, and then we can connect if you want to do the one-on-one coaching. Love the questions. You guys are engaged. I love it. Love it. I love it. Anything else, whether on IG or Zoom, before we wrap up? This is short and sweet, just giving you exactly the information you need, motivating you to take action, because that's what I want, so that 2022 can be a money year. 2022 will be the year you do bigger and better things with your money. That's what I want for you. Okay, I don't see any questions coming in so far. Amen. I like it, Nivek. Amen. Amen. So guys, 2022 is upon us. I want it to be our money year. I want it to be our money year. Thank you. Thank you, Michelle. It has to be our money year. Hit me up. You know where to find me. Make sure you're connected on my newsletter. Lots of investing tips and strategies there. 2022 May it be filled with abundance with your money. May the money come flowing in every day. May you consistently put money in your portfolio and grow your portfolio. That's what we want. All right, guys, Happy New Year when it comes. Amen from Nalwanga High. Oh, I have a question here. Well, I'm grateful for this message. Awesome. Yeah, we're going to talk more on the accounts in the 5-day money bootcamp. Really, guys, jump in. Effortless money here. Love it. Join the 5-day money bootcamp. It is a great investment for the start of the year. You will learn a lot. You have me here as your financial expert, teaching you exactly what you need to do to grow your money. All right. So Happy New Year when it comes. I look forward to seeing you all on the money side in 2022. I'm going to be doing way more of these because you guys love them. So expect to see a lot more of me and a lot more of your money growing in 2022. Thank you, guys. Take care. Happy New Year.